Okay, let's go ahead and get started. Thank you, everybody. Sorry, I'm coming to you from the Northern Virginia Bureau, aka my house. We had a lot of wind in the Washington D.C. area last night, and it just blew over a tree to prevent everybody in the neighborhood from getting to work. Anyway, so apologies again for coming to you from the house, but next Monday I hope to be back in the office. But real quickly, let's talk about last week. Last week was an extremely busy week. I mean, obviously, we had things like Super Tuesday, where President Trump solidified himself as the presumptive GOP nominee. Former governor of South Carolina, Governor Nikki Haley, withdrew from the race. There's all this talk about no labels, third-party candidates, and so forth like that. But the one message that we're telling our clients is, look, the race is President Trump versus President Biden versus the couch, or versus not voting. And that's how we're going to proceed in terms of our policies and our analyses. Anything can happen at the convention, but you are going to see President Trump and President Biden now go out there and try and sell their policies to the American people. President Trump gave an interview this morning. If you're in the tariff space, it's on a rival network. I won't say which one, but it starts with C and ends with C. But anyway, President Trump gave an interview this morning talking about what type of tariffs he would do on Chinese automobiles in particular. So definitely start paying attention more to the language, and we will have more analysis as it comes out. A couple other things that I want to highlight. The CFPB finalized its long-awaited credit card late fee rule right before the State of the Union. This takes the average late fee from $32 and sets it at a cap of $8. Now, assuming this rule becomes effective, and that's a big assumption because there have already been lawsuits against this rule, and my colleague Elliot Stein has already started covering that. And his initial take is that these rules may never see the light of day. But if the rule does see the light of day, you're looking around $10.9 billion in late fees drying up almost immediately. Now, this impacts all credit card issuers, but it should be noted that the private label credit card issuers like Bread and Synchrony and so forth are more exposed to this rule than the others, just given that they tend to deal with a little bit more subprime customers. So, as you go through, and if this is something that you're interested in, as we work through the court cases, definitely reach out to us and we can help advise you what the companies are doing and what the CFPB is doing, et cetera. Another rule that has already been legally challenged that was finalized last week was the SEC climate change disclosure rule. I've talked about this a little bit in the past. Remember, originally I'd said it was $18.4 billion in costs over 6 years. Well, the SEC withdrew what is known as Scope 3. This is the more controversial aspect of the rule. And this rule, we haven't done the calculations on how much it would cost, but it's very much more lenient than what had already been originally proposed. I mean, if you think about just the idea that you now have to materially disclose Scope 1 and Scope 2 emissions if they are, again, material, well, that's something that American firms already had to be doing. And so this is more of a disclosure type rule as opposed to a mandate type rule. And I think this is more designed to put it apples to apples and allow investors to compare and contrast. Now, this rule has also been challenged in the courts. Elliot is also covering that. This is the way how it works. I handle the policies, hand the baton over to Elliot once they are finalized and when they have court cases and such. And so, again, don't be surprised if this rule ever sees the light of day. Elliot thinks that both, the U.S. Chamber and some of the other groups that are interested in suing here have a decent shot. So keep that in mind. Other things that are happening this week, well, there's going to be potentially a vote in the House on a TikTok ban. This came from a bill from the Select Intelligence Committee on China, the House Select Intelligence Committee on China. And this bill would effectively force ByteDance to divest TikTok if it were to pass. And what it ended up doing is it went straight to the House Energy and Commerce Committee, where it passed 50-0. Now that's somewhat unheard of in Washington. You don't really see unanimous support for something as high profile as TikTok. If you have TikTok, you may be seeing that they're running ads saying, call your congressman or your congresswoman, tell them you are against this. So it's a little bit of a interesting subject. Now, the reason why we cover it, even though ByteDance is a private company, is if people aren't in TikTok, well, maybe they'll be going to, Facebook and Meta and so forth like that. So my colleague Matt Shenholm is the one who's covering this. Even though you have this optimistic bipartisan warmth, if you call it that, President Trump did put out a statement even just this morning saying that while he thinks TikTok is a threat to national security, the bill itself is not something that he supports. So Matt's initial take is that you could see the House pass it. They're going to try and pass it via under suspension of the rules, which means you need a 2/3 majority. Even if it passes the House and President Biden has said that he will sign it, be more cognizant of what Senator Schumer is saying right now, because for all the optimism and all the momentum you have in the House, there's really no language coming from the Senate on this, at least from the Senate leadership. And so we just want to make sure that people are cognizant that you may have to hit the brakes, and don't be surprised if this doesn't pass immediately. Matt's views is that this actually could have a little bit more of uphill odds than some of the folks are giving it. A couple of things just going around. Obviously, today is the White House Budget Day, so happy Budget Day to all those who observe. Now, this is where I tell you that the budget is good reading material, but the budget also itself will never see the light of day. For those of you who aren't familiar, the president puts out a budget every year and says, here's what I want the budget of the U.S. government is going to be. You are going to see language in there that may be somewhat scary to certain things in terms of taxes or user fees. This is something that they do at the CFTC a lot. They would say, we're going to require a user fee to pay for some of the appropriations for the Commodity Futures Trading Commission. But just remember, it is Congress that writes the budget, and it's not the White House. So this is just an ask. And the White House puts out their budget and says, this is what we're asking for. This is what we want. And then Congress reads the book and they say, thank you very much. And then they throw it out and they start from the beginning. So, when it comes to the budget, just keep that in mind that, you're going to see some headlines and stuff. It's got to go through appropriations. And as we're dealing with right now is, in terms of government shutdowns and so forth like that, Congress doesn't usually move all that quickly on that. Last thing I want to talk about is the government shutdown. So last week, the president signed a package that kept 6 out of the 12 appropriation bills. The small portion of it, it's about 25% of the government, is now funded through the rest of the year up until September 30th. The rest, the other 6 or the other 75% of the government, has to be funded by March 22nd. I'm not anticipating any fireworks. I'm not anticipating a government shutdown. And I'm certainly, if you're in the defense contractor space, anticipating language that would solidify and push off that 1% sequester, so that if you're in the defense contractor space, and this is what they're very scared of at the moment, I don't think you need to be scared all that much. I think they're actually going to pass that language, push it off to September. We often tell our clients that the most important thing when it comes to these must-pass pieces of legislation is the debt ceiling. And I may have said this on the call last week. I can't think off the top of my head if I did or not, but I'm going to tell it anyway. The debt ceiling is actually taken care of through January of 2025, and it will come up during a lame duck session. So depending on how the elections play out, more likely than not, they will kick the debt ceiling even further. Neither president, whether it's President Trump or President Biden, wants the debt ceiling to return within the early stages of their presidency. So look for the lame duck Congress to try and push that out to even further into 2025, because shutdowns don't scare markets, but I think debt ceilings absolutely do. So I'm going to leave it there. We're going to try and keep it a little bit quicker. Again, if you have any questions, please feel free to reach out to me. My email is ndean10@bloomberg.net. And if you don't get my emails that come out on Fridays, it sort of previews what we talk about, but also provides a little bit more in-depth information in terms of catalysts and events like the House Financial Services Committee is having a hearing on CFPB and fintech this week. I didn't talk about it, but certainly interested if you operate in that space. So just reach out to me and we will get you sorted. Thank you again and have a great day. Great. Thank you, everybody.